Hello, everyone, and thank you for joining us today for our Opportunistic Fund webinar. This is the first one that we're doing of these, one of our new products that launched back in January. And I am here with our wonderful portfolio management team, who's going to walk you through not only the fund, but kind of where they're seeing opportunities right now. We appreciate everyone being here. Like I said, we will run through the deck. We will be recording the webinar session. Feel free at any time to write in your questions. We're going to save, 5 to 10 minutes at the end to take questions from our audience and address anything you guys have. And then we'll be following up if there's, further interest for one-on-one calls to learn more about the fund or anything here at Valkyrie. We are here as a resource and we'll make ourselves available.
Some of the things about Valkyrie that make us unique is, number one, we are digital asset specialists. A lot of our team have been in the space for a very long period of time, some as early as 2012, and have been investors in the space for a long period of time as well. Next, we have experience as active managers. Some of us who come from the world of traditional finance, we're active portfolio managers in that space as well. In strategies that included derivatives, bonds, equities, as well as a lot of experience in active management of crypto. Going back to that, we also bring deep traditional expertise, which allows us to work very smoothly in the ecosystem, setting up funds and managing those funds and trading as well. And then finally, our risk managed focus. That comes from a lot of years in the traditional finance world where we manage all types of risk, anything from counterparty risk to token risk to other types of investment risk. Our deep focus on risk management across our funds has allowed us to escape situations such as Celsius, BlockFi, Alameda, FTX, Genesis, the list goes on. These are all counterparties that we did avoid throughout the last couple of years. And we continue to have a strong focus on risk management across all of our products and across all of our counterparties. We also have a very strong focus on compliance. As a financial advisor, we are a registered investment advisor. We're registered with the SEC, the NFA, and the CFTC. We work with an outside compliance group, Chainery Group, for our ETFs, and we have in-house expertise as well, including our in-house general counsel, who also focuses on compliance matters. We really focus on compliance both firm-wide, and we also make sure that our people are properly licensed and we follow the rules. And that really goes back to our deep experience and bench in the world of traditional finance. And finally, just looking at an overview of our hedge fund. Really the way that what we do is we gain exposure to digital assets through our actively managed opportunistic strategy. We look at special situations. Our investment theses are driven by a macro analysis. We're constantly looking at the macroeconomic environment to help us make decisions on what type of risk to take in the market. We are also strong on the technical analysis side, which allows us to look at good entry and exit points for investments. And then we also have a proprietary trading and screening group and technology as well. What we look at is all types of things, and we'll get into this a little bit. When we're investing in either individual tokens or in other special situations. As far as what we invest in the opportunistic fund, we are constantly looking for special situations and opportunities, which we'll talk a little bit more about today, where we've made a lot of headway. We do have the discretionary ability to long and short. We are not big on shorting. We only short if we have to, but we would rather be long and then exit those long positions as opposed to short them. Shorting is a hedging strategy that we use sparingly, but we do have the ability to use. And then finally, we are looking at, we haven't invested in yet, but we are looking at debt opportunities in the world of crypto, as well as discounted assets, such as the Grayscale Trust is a good example of discounted assets that we find opportunities in at the moment. Moving on to the initial opportunity that we're focused on that I just mentioned, and that's the discounted funds. A lot of the Grayscale funds are trading at really deep discounts at the moment. When the discount was between 15 and 30%, a lot of people got excited about it, and we kept saying, wait, hold. And then finally, in the fall, when the discount got to over 40%, in a lot of cases, 50, 60%, we saw a tremendous opportunity to buy these discounted funds. In the case of GBTC, essentially GBTC is buying Bitcoin at the moment a 37% discount. When we were buying it, it was closer to a 50% discount. So we see a tremendous opportunity in investing in digital assets through these types of funds, and we believe that eventually these will be open up for redemptions and will realize NAV. As far as other opportunities go, we mentioned discounted funds already. We also have the ability to long and short. We do this through native assets on places like Kraken and Coinbase. And then, of course, looking at other types of debt, discounted assets as well. So we've been evaluating debt to some of the lenders like FTX and Genesis to see if there's opportunities there. We are a buyer at a certain price, so we're constantly reviewing those opportunities. In the long run, we do expect to have a blended view of all these different types of opportunities. At the moment, we're probably more heavy in the discounted funds, but as time goes on and that opportunity disappears, we'll find other opportunities. Next, I'm going to introduce our investment team, and then we'll let each one of the members of the team speak. So, myself, I'm the Chief Investment Officer. I'm a former Managing Director at Guggenheim Partners and a portfolio manager there as well. Also former Managing Director at Galaxy Digital, and was the founder of Theseus Capital for Valkyrie. Theseus was acquired by Galaxy Digital, and what essentially became their asset management arm. Next, we have Bill Cannon, who I worked very closely with at Guggenheim. He was a managing director and a portfolio manager there. He was also a broker on the Chicago Mercantile Exchange and Chicago Board of Options. Sean Rooney, he's been trading crypto for 9 years. He handles most of our protocol and custody operations, as well as trading. And then Josh, our head of research, has been trading crypto for 10 years. So he kind of one-upped Sean. He was also on the crypto team at Brave New Coin and a former portfolio manager at Techemy Capital.
What I'm excited about here at Valkyrie. So when Stephen and I started talking about me joining the team, what I was excited about was how his vision, along with Leah's vision, our CEO, what their vision was for the company, right? They wanted a traditional finance company built, but based on digital assets. And I hope I got that right, Stephen. But what I saw was that he, over the past basically year and a half that have been at Valkyrie, that vision has really carried through, where they're building products and they're building the products well. Stephen and Leah also created, of course, our team members here that are not listed here, our operations group, along with all our support staff. They made sure that everything that we do, it goes through a severe due diligence process in terms of what we see as not as, like it says, a robust portfolio construction team. That's what I was most comfortable about, especially coming from a regulated world of fixed income and portfolio management. I was coming into a world where a lot of stuff wasn't, and when I say stuff, a lot of like the investment process wasn't as established as a traditional. Now let's fast forward a year and a half later. After a year and a half of building, after releasing products and what we feel has been successful launches, we are now seeing 2023 and beyond as a maturity process. We want to see ourselves as a growing team. And something that what really is great about this opportunistic fund is the way that it was set up. Stephen made sure that every step of the process of the setup was transparent and was by the regulation or the current guidelines externally from the traditional standpoint. I think that that's something that's everyone that should be comfortable about, and I certainly am very comfortable about in terms of dealing with this. I see that that's their next step in Valkyrie. I see that that's probably the next step in the entire sector, that maturity process of portfolio management. Next one. Here's like some quotes that Stephen has said that over the past couple of years that have really kind of spotlighted about what's going on right now. He was pretty how can I say, foretelling about what was going to happen in terms of inflation and how the economy was going to react going forward. And we bring up these two quotes just because we're just seeing how our portfolio management team works. Stephen and I, while Stephen has a deep knowledge and experience of crypto products, he does come where we met at Guggenheim, where he does come from a background where we did undergo on a daily basis a strict risk management and portfolio management process. We take that knowledge and experience and combine it and cause a synergy with Josh and Sean, who you're going to hear from in a little bit, about that synergy of both sectors, both industries coming together. And we are constantly learning from back and forth. I'm constantly learning about how things are done, how through Josh's technical analysis, how that's done using that traditional established process and bringing it over to crypto, and it's working, right? The opportunistic fund is a product of all that experience that Josh and Sean bring on. And Stephen and I are looking at what we're trying to bring, what kind of value, this price dislocations, along with the variable of this discount in these funds. It obviously provides a great opportunity, and we've certainly seen that year to date in the past couple months of the fund. Next slide. Here, this is just, again, some of the things that we go through. Really, I mean, honestly, like probably 4 or 5 times a morning in our daily calls where we're looking at what the Fed is going to see. Obviously, markets are calming down a little bit ahead of the decision tomorrow afternoon. But what we see is we always have some kind of discussion, some kind of debates. Perhaps Stephen and I differ about what Josh and Sean says, or maybe Josh and I have a head-to-head debate about what we think is going to be the next step in the Fed funds in the Fed fund strategy. Right now is a really delicate time. If you guys look at the Fed fund, how can I say, curve, Fed fund yield curve, it does show a different picture about what it was before 2 weeks ago, before all this kind of banking sector turbulence appeared. Here we have just is something that we look at is a true-flation. What we really like is a true-flation, probably a little more current picture about what's going to happen. Currently, true-flation is about 4.2%. CPI just reached about the 6% level. So let's see how this thing goes on. And as you can see, the Fed funds curve is shortly afterwards. But this is just literally just one topic that we talk about on a consistent basis and how we're seeing how it affects crypto. Now we're seeing banking sectors kind of, obviously, like I said, I don't want to repeat myself, but it's a turbulence. But who's received the benefit of that? It's the digital asset sector, and any kind of disruption in the traditional finance world, it will show Bitcoin. The investors will seek solace in Bitcoin, and we've seen that certainly over the last couple of weeks. Here, I won't go into the specifics, but you'll see that we are taking notes of all the SEC kind of headlines that are going through. This is just some of them. I mean, it's just almost I would say not daily, but it almost seemed daily. But it's happening often where we are seeing this kind of regulatory step forwards, which is good. We want to see those kinds of steps. We are very well prepared, and like Stephen said before, we've already taken the step of taking a kind of a more self-regulation type of strategy where we're anticipating what they're looking for, and we're also trying to be cognizant of what investors like yourselves are looking into a company like ours, right? You want to be comfortable to see like where we're putting stuff, where we're putting your money, and we want to be transparent, and we want to be obviously on a regular reporting basis. We want to act like a traditional asset manager, like some of the big names, and that's our goal. And that's, I think, some of that, like I said before, some of the maturing process that needs to occur but I think that's already undergoing here at Valkyrie.
Sure. Thanks, Bill. Thanks, Josh. As discussed, a portion of the fund will be focused on direct exposure to digital assets. So this slide is simply to provide a high-level view of our process and how we filter out the noise and in order to carve out what we believe to be investable and or tradable. One of the more overwhelming obstacles to overcome for those new to the space is sifting through tens of thousands of blockchains and tokens to find actual value, starting with the basics, including sufficient market cap, proper liquidity, and legitimate trading venues. The list of investable protocols quickly becomes more manageable. And as we continue to zoom in with macro research, this comes into play as we assess the overall appetite for risk and potential headwinds for not only all digital assets, but for different digital assets and how they're compared to each other. Fundamental analysis is where we take advantage of the transparent nature of blockchain tech to assess actual usage and adoption metrics. And of course, technical analysis, which Josh will talk more about in a little bit, plays a big role in not only deciding which assets to invest in, but entrances, exits, and rebalancing positions. And finally, we assess the core principles of blockchain, such as the degree of decentralization and security for a given network. We ask important questions. Does the network scale? Is there sufficient support from users and developers to make appropriate decisions and upgrades so that eventually the network can succeed and onboard millions of users? So at the end of the day, we're left with 5 to 10 protocols that meet these requirements. Of course, we're continuously assessing the landscape in case additional assets become investable in our eyes, or also if something needs to be removed from the list that we have exposure to. And so Bitcoin really stands out as the most established blockchain and the largest by market cap. So as an example of characteristics we might look for, this is just the list of principal traits that make it unique compared to other digital assets, as well as compared to all assets in general. So real quick here, some of the more well-known characteristics are the fixed supply of 21 million Bitcoin, the immutable public ledger, and the open source and transparent nature of the network. Perhaps one of the more important characteristics is decentralization and being able to use Bitcoin in a trustless and permissionless manner. Bitcoin is the most decentralized of all digital assets, and when it comes to decentralizations, a user or a person might not want decentralization until there's actually a need for decentralization. So this is why the most interesting and important trends for the adoption and utilization of Bitcoin have been from emerging markets at this point. The situation in Ukraine comes to mind. Obviously, being forced to flee your home or country is scary, which can only be made scarier if you have to leave with leave everything behind you. However, we've seen examples of people being able to preserve some or all of their net worth since Bitcoin is digital and also easily portable. In Nigeria, there's been a push to use a central bank digital currency and implement major restrictions and limitations on cash. So Bitcoin has become a lifeline there for many citizens or small businesses. And finally, in Turkey, with the recent earthquake, within a day, we saw millions of dollars worth of donations that were instantly available that came to the rescue for recovery efforts. And these are just a few of the examples of the importance of Bitcoin and the reason it's a major focus for us at Valkyrie. If we wanted to pull onto the next slide, if we wanted to pull an even more recent example from the US, we've seen, as Bill mentioned, some turbulence in the banking sector. This is a perfect example to highlight the characteristics and values of the Bitcoin network, because No centralized parties are needed to execute a Bitcoin transaction, and the network operates 24/7, 365 days a year, and in fact has seen over 10 consecutive years of continuous uptime without interruption. So if we rewind a couple weeks to an example here, the fate of Silicon Valley Bank was sort of up in the air over the weekend when other banks and the banking rails were closed. Depositors and investors alike were left in a position where they wonder if they had lost their funds, while other similar banks were forced to assess potential contagion. So what did Bitcoin do? Bitcoin wasn't in Cancun on spring break. The network continued to do its thing over that specific weekend by facilitating over 600,000 transactions, settling over $33 billion worth of Bitcoin. New users were able to onboard if necessary, with over 1 million addresses created. The miners kept mining, the network powered ahead block by block. And lastly, the issuance of new Bitcoin held steady without the need to ease or tighten monetary conditions. So the nice part about moving on, the nice part about having an immutable ledger of all historical transactions and a level of transparency that allows for anyone to audit that database is that we can assess the rate of global adoption based on hard data instead of soft promises. We are seeing an increase in both new and active addresses, and consequently the number of addresses that have a non-zero balance, or in other words, addresses that hold at least some Bitcoin, is sitting at an all-time high of nearly 45 million. So with regards to current on-chain activity, what are we looking at? There's been a flurry of activity throughout the first quarter of 2023, not only with an increase in banking sector turmoil, but also we've seen a bump with increased utility surrounding the support for non-fungible tokens on the Bitcoin blockchain. And in previous markets, a rise in on-chain activity has been a leading indicator for price, and ultimately it can be a healthy signal for the potential start of a new trend. So that's just a little bit of a glimpse into how we're viewing not only Bitcoin, but all the process we go through in analyzing digital assets with regards to the op fund. So now I'll kick it over to Josh, who's ready to dig into some TA.
Sounds good. Thanks, Sean. Yeah, so the first thing people need to realize, are in crypto, is that TA, technical analysis, does in fact work quite well for digital assets. TA is polarizing. It's, some people love it, some people hate it, some people are sort of lukewarm on it. But just knowing some basics can certainly help you, navigate what's going on in the ecosystem. Again, just some few snippets of last year and even before February and January, when we were looking at where do we think price is going? In May 2022, I wasn't a popular person when I said we're probably going to the 200-week moving average, which was around 22,000 at that time. And that's certainly where we went, and a little lower. But the important thing here is the TA allows you to get entries, exits, stop losses. I'm looking at, divergences. We're looking at all sorts of stuff. We're very public about our thoughts on all this as well. It's not really a secret. Chart patterns are also big in what we do at Valkyrie. And even in the current price action, again, we're constantly evaluating on a TA basis where those entries and exits are for any of our trades every day, all the time. Something else that's interesting for Bitcoin specifically is these drawdown periods. A lot of people say, well, I don't like digital assets because digital assets are extremely volatile. And I think there's a place for volatility in portfolios. Maybe not the most, largest chunk of the portfolio, but there's certainly a place for it. So if we're looking at historic drawdowns for Bitcoin, which have been breathtaking, certainly, and definitely greater for certain other digital assets. We're currently seeing, the drawdown period recover slightly faster than the previous drawdown period in 2020 from after 2017, and we're still in this sort of crypto winter, crypto spring, depending on how you want to think about it. But all of this ultimately comes down to a relativity around the Bitcoin block reward halving, which is when the issuance declines by half. And using these as a backdrop, again, to sort of understand, people love to get bearish at the bottom, bullish at the top, using sort of the prior price market structure to help determine what's going on and really set your head straight on where we think prices are going in the future, which is a dangerous game, but it certainly helps, especially when we're looking at things like seasonality. This is a comparison again of halving. And if you think back to that earlier slide where we were talking about the Fed funds futures probabilities, 2 weeks ago when I started to put this together, the decline in the true pivot, if you will, in the Fed funds came around the Bitcoin block reward halving, which is projected to be somewhere in April 2024. Now, we'll see what happens after tomorrow, but as we sit here today, the Fed fund futures are pivoting, easing, however you want to think about that, much, much earlier. In either case, Bitcoin is likely to benefit from that because of, again, that relativity around halving. This is just a view of what we've seen weeks prior to halving and weeks after halving. It's no secret that it's happening. Again, this is scheduled. It happens at a very specific time after X many blocks, and you can track that. So that's certainly what many people are doing and have done. And that does help guide, again, how do we think that supply issuance is going to affect fundamentally price? If there is inelastic demand and inelastic supply and elastic demand, how do we think that's going to affect price? Here's another look at sort of the seasonality sleeve or slice of things. On the left here is all of the dates where we've seen months that have closed greater than 40%, let's say, since 2014. I think another common misconception is, well, Bitcoin was up 40% in January, so I kind of just missed the boat, right? It's one and done, it's over. And this is showing the forward performance of months after that 40% rally. That 15% current 3-month outlook is a few days behind now, but in general, looking historically, the first thing you might notice is January being up so much is a rarity. Typically, we see Q2 and Q4 being the best performing quarters. I think the tax loss harvesting potentially at the end of 2022 certainly helped shift seasonality slightly. That's a working theory anyway. But the forward performance, again, letting the future sort of guide us a little bit here, looks fairly decent for continued bullish rallies, even 6 months, year out of January. And again, this leads into 2024, which leads into halving and gives us a bullish picture going forward, sort of regardless of what's going on in the real world with banking or rates, or this viewpoint that centralized entities are sort of dropping the bag here on what's going on. But again, this helps guide us and set our head straight for where we think things might be headed. And looking at some long-term, historical technical analysis, again, with the lens of where are we relative to halving, what has price looked like in halving, before halving. These yellow lines here are where Bitcoin's halving has occurred. The green line here is the 200-week moving average. And I also have the power law corridor, which is sort of a logarithmic regression historically, where prices have been. And it's nice because it gives you sort of a band of expectations. Are we oversold? Are we overbought? Are we above or below that 200-week moving average? And it certainly looks to me as though we're closer to a bottom, or we hit the bottom, relative to the top. And this could certainly change, obviously, but this again just helps set our head straight here. Like, where do we want to be accumulating? Where do we want to be taking our foot off the gas, that sort of thing, relative to historical TA. And I think I'll just mention this as well on the last slide here. Relative to traditional finance, again, another common comment is, well, it's just like the NASDAQ, it's just a tech stock, or sometimes it doesn't outperform the S&P. Sometimes we're highly, highly correlated to the S&P. Sometimes we're not. Sometimes we're highly correlated to the NASDAQ. Sometimes we're not. But we're start to seeing now, after 2022, is on the left here is Bitcoin against the S&P, on the right, this Bitcoin against the NASDAQ. We're starting to see outperformance against both. We're starting to see decoupling against both. Yes, we will probably still be fairly correlated with the NASDAQ, but that has declined significantly over the past 6 months, let's say, relative to where it was in 2022. So again, if we're thinking about portfolio construction, it's a chameleon. It can be a commodity. It can act like a commodity. It can act like gold sometimes. Sometimes it acts like a tech stock. Sometimes it acts like real estate. We can look at those correlations over the years, but it has been really led by whatever the narrative is at the time. And right now that narrative is definitely against centralization and the failure of central banking and what's going on in the current environment. And I'll just leave this as our last slide here, just as the terms for the fund. And I think we'll open it up to questions if there are any, and if there's anything else any of the PM team wants to discuss here.
So we have one question. Do you already run a similar multi-coin strategy? And if so, what is the track record?
Yeah, at the moment, we do not run a similar multi-coin strategy. We did run a private multi-coin strategy last year that we essentially rolled into this. So we can get you information on that.
That's the only question. If anyone else has questions, feel free to just write into the Q&A. We have a few minutes left.
Well, we certainly like to thank everyone for joining us and hearing about Valkyrie, hearing about the Opportunistic Fund. You can always reach out to Shannon if you have any further questions. We'll hang out for a couple more moments. If there's any questions that come through, we're happy to answer. Other than that, thank you very much for your time.
Thanks, guys. And like I said, we'll be circulating the recording, so feel free to reach out if you have any additional questions. And if you have anyone else that you think would be interested, feel free to pass that video along. And if not, we will talk to you guys all soon. Oh, sorry, there is actually another question. What fund size are you looking to raise for this? And is there already committed capital?
Yeah, we do have some committed capital already, and we've already had some committed capital that has already funded. Our target size for this fund is 50 million.
And that was the final question. So thank you guys all for your time, and we'll be in touch soon. Thank you, Josh, Sean, Stephen, Bill. Bye, guys. Everyone have a good rest of your day.
Thank you.
Bye.
Thanks, everybody.